Hello, and welcome to the Logistics Management Podcast Series. My name is Jeff Berman. I'm Group News Editor for Logistics Management Magazine and also the Peerless Media Supply Chain Group. It's a real pleasure today to welcome back Evan Armstrong to our podcast. Evan is CEO of Armstrong Associates, a Brookfield, Wisconsin-based supply chain consultancy. Evan has more than 20 years of experience in supply chain management and logistics. As CEO of Armstrong and Associates, he oversees many of its market research initiatives and also provides consulting services to supply chain participants in the following areas, including business planning, logistics outsourcing, mergers and acquisitions, market analysis and benchmarking, transportation management, and supply chain systems evaluation and selection. Prior to joining Armstrong and Associates in February of 2000, Evan was vice president of pricing at Roadrunner Freight Systems. He has also held sales, marketing, and operations positions with major providers of small package transportation, LTL transportation, and 3PL services. He's also developed and implemented transportation and logistics systems and has spearheaded startup logistics operations for Fortune 500 customers. Evan, welcome back to our podcast.
Thank you, Jeff. Great to be here.
Yeah, it's great to have you back on. Evan, before we sort of jump into the nitty-gritty, for those in the audience that may not be familiar with you guys, can you just please provide a quick overview of Armstrong Associates in terms of what you guys do and your services and the companies that you have as customers, or types of companies you have as customers?
Yeah, no, that's thank you, Jeff. Thank you for that. So, we do most of the work we do is around the third-party logistics industry. We really gained a lot of knowledge helping shippers outsource functions to 3PLs, and we still spend quite a lot of our time in that area. We've helped quite a few shippers over the last couple of years find the right 3PL partners to work with and get themselves situated in terms of reducing cost and improving performance. We also work with 3PLs themselves in terms of optimizing their growth strategies, business planning, and then we get involved in mergers and acquisitions and third-party logistics, primarily on the buy side, helping 3PLs buy other 3PLs, working with private equity investors in terms of evaluating 3PLs for investment. And of course, we spend a lot of our time on the market research side, analyzing markets, analyzing various segments of the market. We just had a global logistics paper come out. We're getting ready to release another big and bulky last mile report. So we get involved in a lot of areas. And then we have proprietary warehouse pricing benchmarks. We spend a lot of our time working with shippers, analyzing their warehouse networks and really seeing if their pricing's in line with the market, and then helping them outsource functions or find the right 3PLs to work with and secure at least market level pricing, if not better. So
Okay.
That's how we're spending our time these days. Thank you, Jeff.
All right, great. You got it. So looking at the 3PL market, I know that we're now officially in March, almost halfway through it, through the first quarter. How would you sort of describe where the market stands at this point, coming off of 2023? We actually spoke a few weeks ago about your very comprehensive report that we'll address in a few minutes about 2023 and what the prospects are for this year, next year, and beyond. But looking at the market now, Evan, what are you seeing? How would you describe it?
Yeah, I think what we're seeing is we've somewhat normalized, right? So we've come off of the pandemic shutdowns where we had crazy demand, operational disruptions because of COVID-19. Soaring rates based upon that demand as everybody tried to get inventories restocked, and then that actually led to an overstock position on the warehousing side.
Mm-hmm.
So now we've fairly normalized. International air and ocean rates have come down. Domestic transportation rates have come down. Warehousing wasn't impacted as much, but at least now we're seeing, about a 4.8% vacancy rate on the warehousing side. So, a lot of the inventories, on-hand inventories have rationalized. And, when we go into warehouses now, they're running about 85% utilization instead of 110% utilization. So that's a good thing operationally. It's a good thing from a logistics cost standpoint, which have come down. And, overall, this is we're getting back to normal. In some cases at higher rates, higher levels of rates. In other cases, when it comes to transportation, we're still a little bit below where we were last year.
Mm-hmm. All right, great, great. And then when we look at the things that you guys sort of have as subsets when you put out your research, your data, and your reports, whether it's digital freight management, dedicated contract carriage, international transportation management, value-added warehousing and distribution, are there any like we don't need to go through from a numerical or financial perspective, but within those various subsets that you guys track, I am really referring back to your recent report that we discussed
Sure.
about 3PL market revenues and the intersection of all these different subsets. How would you sort of view what we went through in 2023, which in terms of global revenue, we did see a decrease revenue wise.
Correct.
What was happening in 2023? Obviously, there were a lot of different challenges. I think of the freight recession. I think of especially back to the first half of last year with really still high inflation, et cetera. Those are just a couple things that I thought of. But taking a look back and it's sort of the intersection with the segments that you guys track and provide research, data, and analysis for, how would you sort of address those types of things?
Yeah, well, I mean, in terms of globally, in 2023, logistics costs went from about 11.4 trillion down to 11.2 trillion. In terms of 3PL revenue, about 1.5 trillion down to 1.2 trillion. Now in the US, what we saw was about a 20% decline in terms of domestic transportation management revenues. So that's the freight brokerage and managed transportation piece of transportation management.
Yes.
Air and ocean forwarding down about 49.3. Dedicated contract carriage held up pretty well with a 5.4% increase last year. And then value-added warehousing distribution about a 4.5% increase last year. So dedicated, where you have contracts in place, the revenue decline for 3PLs has been less. And, things like the spot market for dry van, truckload, and refrigerated, of course, kind of fell apart as demand decreased and rates came down. And of course, air and ocean declined significantly. Now, this year, we expect the second half to be better than the first half for domestic transportation management. And we'll probably register, a small single-digit growth in that area. And probably be break even to a little bit of growth in international transportation management, and we still expect about 7.5% growth in dedicated contract carriage and about 4.6% in warehousing. So that's kind of where we're at now. I think in terms of for shippers, I think things to think about are, warehouses are still tight, but they're not as tight in terms of capacity as they were 2 years ago, and transportation rates are down. So we've been working with shippers on the outsourcing side, really helping them to get good 3PL agreements in place, get some good market pricing in place, things like that. It's amazing how many shippers got themselves upside down in some pretty one-way worded contracts over the last 2 years on the warehousing side.
Okay.
So we're trying to work with them in terms of getting that normalized, signing contracts without any KPIs in place or any performance, type of measurement in place, zero pain share, things like that.
Yeah. Yeah.
So a lot of that is getting rationalized. And then on the transportation side, really, looking at, are there ways to use retail consolidation? What can you be doing from a truckload LTL standpoint to really, maximize performance and keep your costs within budget?
Okay, terrific. So, those growth projection numbers you just laid out are looking pretty positive, pretty encouraging. And I'm wondering, Evan, do you think it sort of suggests or indicates, if you will, that perhaps we are on the path, I guess, the path to normalization, the path to a kind of a steady supply chain production or operations, and I just ask that given what we've all clearly been through going on 4+ years, one challenge after another, and we're still obviously dealing with a lot of challenges at the moment too when you think about the Panama Canal, the Red Sea, the upcoming East Coast labor contract. There's always something going on, always something that has the potential to wreak havoc on supply chain operations, but
Yeah.
even with that to the side, do you think we're in a decent spot relative to where we've been over the past couple of years?
Yeah, I think, in terms of the US market, I think we're definitely in a recovery mode, definitely in a pretty good spot. We're definitely being helped by, reshoring of some manufacturing operations to Mexico. Globally, there's some movement of activity Southeast Asia, especially like Malaysia, in terms of nearshoring, kind of reshoring activity from China. And, warehouses are full. The problem is that with high interest rates, we've seen less development on the warehousing side, which is keeping a cap on the amount of warehousing space.
Okay.
So I think, we've been spending a lot of time on the warehouse pricing side. I think it's important for shippers to look at their warehouse pricing. I think it's important for 3PLs to make sure that they're pricing properly in terms of what's going on in the current market. And then on the transportation side, it's really about, how, if your supply chains are changing, if you are nearshoring, if you're doing, say, more business manufacturing, say in the Maquiladora area of Mexico,
Mm-hmm.
um, or forcing more cross-border activity south to north. Now that Mexico is our largest trading partner, of course.
Yes.
What is your strategy for that? How are you going to manage those operations, and what 3PLs can really support you in those efforts?
Okay, yeah, and if you don't mind, let's peel the onion just a little bit more on Mexico because you can't help but notice some of the big 3PLs continuing to expand their presence and operations there. And the two companies I think of immediately are C.H. Robinson and Ryder, which both have expanded their operational presence in Laredo, Texas, and in and around the surrounding areas. I don't mean to talk about those two companies specifically. They're just merely
Okay.
examples. So what do you, I mean, this definitely feels like, if not the beginning, maybe like the third inning of the nearshoring boom or push. And how do you assess it at the moment? And how do you see things potentially progressing as we move forward?
Well, there's, especially after what happened with ocean shipping during the pandemic, a lot of it's about risk mitigation,
Hmm.
getting product closer to customers, especially in the US and in North America. So, we're seeing pretty significant growth south of the border. When you talk about companies like Ryder's had operations in Mexico for years, very strong operations, supporting a lot of different customers, very good. transloading operations, very good cross-border operations. C.H. Robinson, of course, is managing some automotive. They've always had a lot of northbound produce that they've been managing out of
Mm-hmm.
Mexico through the fresh operation. And, two good providers. And place was always pretty good, which is new of Uber as well. Of course,
Yep.
riders and a lot of the freight forwarders have had pretty good operations.
Okay, great. And then it, the 3PL market is always replete, it seems like, with a fair amount of M&A activity. I guess the most recent example of that is we're seeing I believe it was Wincanton for being acquired by GXO, or in the process of being acquired by GXO. That's just that one popped off in my head is just the most recent one. There's obviously been tons of others over the years. Um,
Yep.
Growth by acquisition is far from a new theme or trend, but it's certainly alive and well. And I'm just wondering how you sort of view the current state of M&A in the 3PL market, whether it be on a global or domestic basis.
Yeah, well, we have a proprietary database of over 2,000 3PLs now, and we actually do a lot of buy-side M&A work, usually for strategic buyers, and then we support private equity companies, usually on operational due diligence. So
Mm-hmm.
over the last year, we've contacted probably over 1,000 3PLs on the buy side, and I can tell you that now is a pretty good time to buy, especially in domestic transportation management. So freight brokerage, a lot of freight brokers overstaffed in 2022 in the boom years, and have you know have run into issues as we had the freight recession last year. So valuations have somewhat normalized, expectations have normalized. So I'd say it's a good time to buy a freight broker. On the warehousing side, a little harder to find potential candidates because it didn't see the same, overall recessionary trend that we saw in the domestic and international transportation management side.
Mm-hmm.
But I think now's a very good time to acquire. I think, in terms of selling, I think there's still plenty of realization that things are going to come back later in the year. So I don't think it's a bad time to sell either, depending
Okay.
on the situation. And especially if you're like, a baby boomer or, maybe not quite as old, but you're looking to retire and spend more time somewhere else and doing something else. I think there's plenty of good negotiations that can be had.
Okay, great, great. And just in the few minutes that we have left here, Evan, I was curious if if you were to identify or pinpoint, a few things that are top of mind for 3PLs over the course of 2024. I mean, it could be anything, it could be the upcoming election, different factors within the economy, labor, technology, and we'll actually touch on logistics technology in a minute too. But what are some of the things that jump out at you as I don't want to call them hot button issues. That makes it sound a little dramatic, but just things that 3PLs need to be keeping an eye on.
Yeah, I think it's really so automation, automation, and automation really,
Mhm.
and the reasons for automation are, when margins get squeezed, um, you have to figure out ways to automate, no matter what part of third party logistics you're in, to reduce back office costs, to reduce, um, you know, picking and pick path um, cost within a warehousing operation, to reduce, what you're doing in terms of transportation procurement on the transportation management side,
Mhm.
uh, better optimize routes, etc. Right? And AI is making inroads. Machine learning is definitely making inroads, and we're seeing more and more robotics being utilized on the warehousing side to really to support people for the most part. And then, to automate, specific operations, say if you have like garments that, it's pretty easy. It's a lot easier nowadays to put in a flexible tilt tray sorter, for instance, versus any time in the past, or using cobots to allow people to pick to bot and then have the bot make the run to the pack station. So,
Hmm.
I think automation is huge right now. And then on the procurement side, really it's about, if you're in freight brokerage, if you're a managed transportation provider, how can you build good relationships with the right carrier base to make sure you're getting performance for your customers and, trying to reduce cost where you can. And that's really about getting back to better carrier management, better carrier loyalty type programs, everything that everybody forgot in 2021 and 22 as they scrambled to get a truck anywhere at any time.
Got it. Got it. And I was looking at the report that we had talked about before. And when we look at logistics technology, in terms of a global spend number, I mean, and I'm just reading this from my article. It said global 3PL spending on high tech was estimated at 259.1 billion in 2023, and that was being paced by the growth of things like data centers, networking equipment, and an increasing focus on AI.
Yeah.
That is a huge, huge number. Um, and based on what you've been telling me, would it stand to reason that we'll only see that number continue to grow in the coming years?
Yeah, I think, in terms of 3PL gross revenues, high tech has uh, grown faster and is expected to grow faster than any of the other vertical industries in terms of spend with 3PLs. And by 2025, we expect the global spend with 3PLs by the high tech sector, technological sector, to be about $372 billion. So surpassing things like retail, surpassing things like food and grocery.
Oh yeah.
And we're seeing it a lot with, things like network and communication equipment. We're seeing it with, various, communication equipment. So, all of that, if you turn on Bloomberg and hear about AI, well, to support the artificial intelligence, it takes, a lot of computing capacity. And, a lot of 3PLs are working with companies such as Google, such as Dell, et cetera, in building out that capacity.
Okay. Okay. Great. Great. And and just to wrap up here, Evan, when we look at sort of some of the economic trends, indicators out there, if you will, I'm thinking like inflation, energy prices, retail sales, GDP, things like that. What are the
Yeah.
ones that you typically keep the closest eye on as it relates to, for lack of a better word, the state of the freight economy, where things might be going. I'll throw inventories in there too, because we're now starting to see some of that destocking and increased stabilization relative to where we were even a year ago. But what are some of the key things you focus on in terms of those types of things?
Well, I mean, the biggest thing about inflation is that, it impacts sectors differently, but overall, in order to combat inflation, the Federal Open Market Committee has raised interest rates, and interest rates, have a negative impact on investment, because we're used to having pretty low cost money, right? So,
Yeah,
that keeps a lid on warehouse space, which keeps a floor underneath warehouse pricing. So, I think that's on the warehousing side, that's probably the biggest thing. And then, of course, labor, just trying to find warehouse workers is a challenge. Trying to find warehouse workers that are forklift certified is another challenge.
sure.
And And then, trying to find a 3PL that has very good integrated systems between warehousing and transportation management and can sell both is another challenge. So, I think the economy, it seems like, stock market's hitting new highs. It's doing pretty well. There might be a little bit of a bubble forming, but overall, it looks like companies are doing pretty well. Even old line manufacturing companies, like Modine or A.O. Smith, etc. So I think we're good from that standpoint. Automotive, it seems like some of the EV hype is getting rationalized, especially if we can have cheaper oil and cheaper gas. There's less interest in EVs. And then, but how do you support that manufacturing going forward? Because it will be very important going forward, even though we have a little decline right now.
Yeah.
So, we're seeing 3PLs, support electric vehicle manufacturing, the batteries that go into electric vehicles, those data center networks we talked about. And, I think those are the big things. And I think we just got to get used to the world being a fairly uncertain place. We have the war in Ukraine, we have what's going on in Gaza. Instead of viewing it all as individual point-to-point hotspots, I think from a supply chain management side, we just have to say, okay, at some point, at any time, something can happen. And how can we adapt our supply chain to these different, political situations, different, disruptions that are out there, and how do we make our supply chain more agile?
Got it. That's great. It's a great spot to wrap up. Evan, on behalf of Logistics Management Magazine and the Peerless Media Supply Chain Group, I'd like to offer up a big thanks for spending some time with us today.
Oh, thank you very much, Jeff. It's been great.
Yeah, absolutely. And I look forward to having you on again. Those of you in the audience, please feel free to go ahead and check out the Armstrong Associates website simply at 3plogistics.com. And for those of you that may not be subscribed to our podcast, simply go ahead and search for Supply Chain 27, or I'm sorry, Supply Chain 24/7, wherever you get your podcast. And also look for us on Twitter. It's at Logistics MGMT. Thanks everyone, and we'll see you next time. Have a great day. Thanks.